Nigerian stocks have witnessed an extraordinary surge in value, with several stocks experiencing gains of 400% and above in the year 2023. Investors who purchased shares from specific firms at the beginning of the year and chose to maintain their positions have cause for celebration, as shareholders have generated returns exceeding 100% despite the macroeconomic challenges in 2023. The stocks of Computer Warehouse Group, MRS Oil, Transcorp Hotel, CHAMS Plc, and 27 others listed on the NGX have achieved returns exceeding 100% in the initial three quarters of 2023, impacting the overall market performance. So this morning, joining me from Lagos, Nigeria, is Oladipo Ajayi, Head Fixed Income and FX, Chapel Hill, Denham Securities. So thank you so much, Oladipo, once again for talking to us on the show.
Thank you. Good morning. Thank you for having me on this morning.
Now, seeing the Nigerian stocks gain about 400% and above in profit in 2023 may strike some as a surprise, and of course a huge departure from what obtained in recent pasts, where there were fluctuations as we saw huge losses and macroeconomic challenges in the country's bourse. But then for you, were the signs bullish from the onset?
Yeah, to be realistic, when you look at markets, going beyond the normal economic challenges that is currently happening in the country, there's a lot of opportunities that those economic challenges also bring to the table. I think in a cloudy situation, there's always a ray of light, and I think that's one of the things that the stock market actually brings to the table this year. If you look at the market critically, sincerely speaking, from the beginning of the year, we are actually starting on a low base, looking at where most of the stocks actually opened at the beginning of the year. And also, towards the end of last year, it was pretty clear that most people were out of the market, knowing fully well that this year is going to be election year. And all from accident, what we know is that post-election, we tend to see a lot of people coming back into the market. And that's one of the reasons why I was bullish at the beginning of the year about this year, that it's going to be a very great year for the equities market. And aside that, we also saw Apple transactions that actually went through the market. We saw transactions like the Dan Sugar and NASCON, and also the Dangote Rice coming together to form a company called Dangote Foods. We saw Transcorp actually acquiring a huge percentage in Abuja Abuja Disco, sorry. We saw other transactions like that actually coming to the table, and those are some of the three things that actually prop up prices in the market, and also led to where we are now in the market.
Yeah, with the acquisitions and the mergers, we saw that shareholders generated returns that exceeded projections after maintaining their position, well, despite uncertainties. But then, what actually spurred the resilience? And I'm just wondering, if it had gone south, how monumental would the loss have been?
Well, one thing about markets, it's a profit or loss market. It can either be profit or loss. But there are some instruments that you put your money in that you are so sure that even if they are not performing very well at any particular point in time, you are very sure that there will be dividend payments, and that will, one way or the other, pushing the effect for the year. And just like what you said, if they have gone south, look at if you look at CHAMS, for example, what further south will CHAMS go to, where a stock that actually started the year at 22 kobo? I don't think if anybody that one has invested into CHAMS, the worst that would have happened is that you'd have lost 22 kobo on each stock that you invested. That's if at the end of the day, the company is declared bankrupt and needs to be liquidated. So it simply means that what you would have lost is just 22 kobo. So there are some of these stocks that are in the market, you understand me very well, that they bring a lot of opportunity in the market and to the table rather, and it takes people that can actually sit down with the market to understand the dynamics of the market to be able to play along. If you look at MRS, for example, MRS started the year around 10 and currently is at 104. And one of the reasons why we saw that huge jump in the MRS price this can be attributed to the current oil prices, global oil price. And most of these companies, they are directly related to movements in that segment of the market. So some of these things are things that that market has together that actually led to, at the end of the day, where we are currently. But if other way around it has gone south, of course, what it means is that a lot of people that booked loss in, but I don't think anybody is investing in the stock market for a short horizon. Because I expect when you invest in the stock market, I expect people to actually look like between 3 to 5 years horizon for investing in the stock market. Stock market is not a market where you go in today and want to get out tomorrow. And that's one of the reasons why a lot of people actually book loss in the stock market, and they tend to actually run away.
You've talked about a few of these companies and the stocks, but then let's look at it holistically. The domestic stock market closed out the year 2022 with an impressive gain of about 19.98%. And by September 29 this year, it surged even further to reach 29.52%. That's over a 10% increase in performance. If we are to look at it holistically, what were the enablers? And is there a possibility of higher yields to close the year?
You see, the real enabler, to be realistic, is the market-friendly policies from the current government. Because I remember vividly when the newly government was sworn in on the 29th of May, the president actually announced the removal of subsidy, and also at the same time, harmonization of the foreign exchange window. And the expected impact is that when you harmonize foreign exchange window, what we expect is that that will help the FX market to trade appropriately, and at the same time actually give foreign investors opportunity to actually come into the market. And by so doing, what that will mean to the markets is that we expect prices of stocks to actually rise at that particular point in time. And that's exactly what market actually traded, and that's why we saw that huge leap. And also at the same time, removal of subsidy also means that the government will have more funds to play with. It simply means that the debt structure and the debt profile of the country will actually reduce drastically. And also, don't also forget that what that will mean is that it will mean we have more revenue. So when we are now looking at cost of servicing debt to revenue, I'm not sure it will be in the same region as it was in March, when we were around 99%. Of our 98, 99%. So what that simply means is that we're actually using 98 or 99% of our revenue to actually service debt. So some of these things are policy that was made in May, and that actually stand like the catalyst that actually push market to where we are currently. And also, we also know very well that the harmonization of the exchange rate window actually pushed naira dollar to 770 levels in the higher window. So what this also means to banks that are currently sitting on positive FX net FX open position means that they will actually book exchange gain, and that's exactly what we saw when most of them released their financials. We noticed a lot of them booked a huge FX gain. And that's some of the policies that the market saw, and that's why we saw that level of interest in the market.
Of course, you've talked about some attending factors that could have influenced the positioning of the market. But then one would also want to look at the prevalent inflationary pressures, which could have discouraged and dissuaded investors in focusing on other markets. But instead, analysts said that it was a motivating factor for them. So I'd like to find out, how do investors think through opportunities when focusing on market forces like this? Of course, you've talked about government policies, but when it comes to the readings or the focuses of investors, does it have to do with the risks that they need to take, or the readings and areas that they need to plug in their funds?
Yeah, I think we have to look at both together, because firstly, the investors in person has to be able to be ready to actually take the risk, and also at the same time, because sincerely speaking, inflation is not of 25%, and the fixed income market, the highest, the longest duration is currently trading around 16.1%. And when you compare that to inflation, it means that we are like about we are close to about 900 basis points shy of where inflation is currently. So it simply means that whatever return you are making from fixed income side will not be able to cushion the effect of inflation. And I guess that's one of the reasons why a lot of people now have to look other way around to see what is happening in the equities market. If you look at it currently, as it is now, when you look at the market mix, we have over 95% local participation in the equities market. And so what that simply means is that in only 5% participation that we are seeing currently from foreign investors in the market. So what that also means to us is that a lot of people are now getting to understand that in time of huge inflationary pressure, the best market where you can actually get to actually make returns that can help pushing the effect of the huge inflationary pressure is the equity market, and that's actually what lured a lot of investors into the market. And also, when you now look at a lot of the policy that I've actually highlighted earlier on, and when people start seeing the impact of that policy in the market, and also in the financial of some of these companies, it also now reinforced their belief in that market, and that is why we saw the level of success that we have seen in the market. It doesn't mean that the market has been extremely bullish all time. There are times that you see sellers in the market coming to the market to sell down some of their position. However, we tend to see more like a resilient market where buyers will also come in to actually take position at any particular point in time.
Yeah, talking about success rate, one of the performing stock or market or company, as you mentioned earlier, was the CHAMS Plc that was actually ranked fourth. But then let's look at the number one ranked stock, that is the Computer Warehouse Group. And according to reports, over the past 4 weeks alone, the stock gained 137% and was said to be the best on the NGX. Well, so what were the factors that propelled its share price rally?
Well, for Computer Warehouse Group, if you look at that particular stock, you opened the year at 1 kobo, and but we started seeing interest in the last 3 months, and if you look at the last 3 months, the total number of stocks that traded in that particular instrument is over 120 million. If you look at that very clearly, and so what it actually means is that more likely the 49th most traded stock in the market. And what actually lure a lot of people into it is more like their financials and their returns, and just like the same thing and actually happened to CHAMS. When CHAMS released their results and people saw that huge leap, a company that has consistently booked losses and suddenly came out and book extraordinary profits. So it's more like a catalyst to people like, wow. So it means that the stock of that part of the company is not appropriately priced at 22 kobo. And that same thing that we saw on Computer Warehouse Group when the results were released, and people saw huge level of improvements in the business, and as a result of that, we started seeing interest across board on that particular stock. That's why we have seen that huge leap from 1 kobo where the stock opened at the beginning of the year to 790 kobo where he actually traded as at the end of the Q3.
Now, MRS Oil Nigeria's share price surged to 637 points, up 59% to 104 naira per share from 14 naira 10 kobo per share at the beginning of the year, and that made it to be ranked second on the NGX and the second best performing stock, of course, the best performing stock in the oil and gas sector. So how would you describe its stride amongst stiff competitions in the oil and gas sector?
Sincerely speaking, what's actually pushed a lot of people actually, and by the way, it's not only MRF that actually enjoyed that rally, but it's just that because they were coming from a low base, they enjoyed it better. We saw that in also some other oil and gas companies as well. We saw that impact also in Wando and some other ones. But one key thing about MRS is the fact that they've been able to sustain their trend of profit. And if you look at it, the profit after tax that was released for the year was they released about 2.3 billion, and that was more like about 500 and over 500% jump or leap in return compared to what they actually booked last year. And like I mentioned earlier on, I said a lot of people also look at the fact that currently oil price is on the rise. And this could mean a better days for companies that are actually operating in this segment of the market. And also, when you now look at also companies that also play in the downstreams, like MRL, and when you see policies where, just like what we mentioned, removal of subsidy, and the fact that also at the time the federal government said they are actually giving licenses to oil importers to actually bring in their oil from offshore. So what that means also to some of these businesses that are actually operating in that segment of the market is that it means that the good days are here. So it means that they cannot aggressively actually invest in that segment of the market to actually improve their bottom line. And that's some of the things that the market actually factored in that led to the huge movement that we saw in MRS. And just like what you said, MRS started the year at 14.5 kobo, and here we are now, north of 100 naira for the same stock that actually started started the year at 14.5 kobo. And that's one of the reasons why I said that equity market will always give. If you're actually very conversant with the market, can give you return that can help you pushing the negative impact of the inflationary pressure in the economy.
So is that the same story for Transcorp Hotel shares? Because that was picked at number 3 at the modest price of about 6.25 naira per share. At the start of the year, it actually reaped impressive gains, approximately of about 610% in the hospitality and hotel industry. So is it the same case too for Transcorp Hotel shares?
One thing about Transcorp is that if you look at the history of the company, they've been making profit back to back, except 2020. When did they actually declare loss? And we all understood what happened in 2020. That was the lockdown year. That was the year where business activities was actually affected seriously. And of course, that is pardonable for them. If you look at their result for the year H1 2023, they actually grew their bottom line year on year by 46%. And the driver is that when you are talking about the hospitality business, the first thing that comes to mind is Transcorp, and because of the level of service that they actually bring to the table, and the quality of the service that actually that brings to the table. So and I think a lot of people, when people are actually analyzing sector, and you are looking at the sectors that you think would thrive in a specific time. When you are looking at the hospitality business, of course, Transcorp comes to mind, and that's one of the reasons why we have seen that huge interest. We saw Transcorp at the beginning of the year starting at 6.25 kobo, but now the stock has actually increased drastically by about 610%.
Let's quickly talk about CHAMS Plc before I let you go, Oladipo. It was ranked 4th, and it had issues with its stocks, with, of course, short-term volatility being characterized by it. We saw a decline of about 16.88% below its 52-week high of 54 kobo that was set on September 21, 2023. So what were the initial struggles for CHAMS PLC, most especially this particular company, and how it was able to turn over and have an appreciation in profits?
Yeah, CHAMS is an ICT company, and they are a processing system company. In the last years, we've been noticing that the company hasn't been doing very well, and I think it's been their dark moments, and that's one of the reasons why the market actually punished CHAMS to the extent that they sold their shares down to 22 kobo. But when you now look at where the return actually that the company actually declared, the company declared a profit growth of about 1,426%, and that is massive. It was this level of return that actually changed the mindset of investors around the company. And mostly what most investors are shopping for is return and the capability of the company to actually pay dividend. And a company that is that's actually struggling, of course, beforehand, of course, what you expect a lot of people to actually run away from such company, and that's what we've been seeing on CHAMS on this particular instrument for a long time before now. But when the market saw that level of improvement. It shows that the management has changed their strategy of actually operations, or at the same time, it also means that the previous investment into the company is now materializing now. Because one thing about investments is that when you make investment in a company, you don't tend to see the result just immediate. So it simply means that the past investments into the company is now materializing now. And a company of such like CHAMS that operates in the ICT company sector is expected to actually perform very well, knowing fully well that mostly everything in the world is being digitalized, and it also means that it should be a good day for such company. Okay. And I think that is what the company is currently latching on to take advantage of the current happening globally, and that's exactly what's playing out for them. For me, I expect CHAMS to actually capitalize on this the more. Okay. I expect them to actually expand into various segments of the market in a way that they can help to actually develop businesses and help to actually improve business service to people via the use of digital stuffs. And I think with that, they will be able to maintain this level of return. And by so doing, the level of the valuation of the company will actually improve again.
Oladipo Ajayi, Head Fixed Income and FX, Chapel Hill, Denham Securities. Thank you so much for your profound contribution on the show.
You're welcome.